Welcome students. Today we will see next organized sector, commercial bank. So see commercial bank. Commercial bank act and intermediaries in the country's financial system to bring the savers and investor together. They are profit seeking financial institutes. Acceptance of deposits and granting loans and advance are the primary functions of commercial banks. Commercial banks play an important role in mobilizing, saving, and accumulating them through various sectors of the economy. It includes both scheduled commercial bank and non-scheduled commercial banks. Scheduled commercial bank are those includes in the second schedule in the Reserve Bank of India Act 1934. In terms of ownership and functions, commercial bank in India can be classified into four categories: public sector banks, private sector banks, regional rural banks, and foreign banks. There are some definition of commercial bank. First, Banking Regulation Act of 1949. Banking means the accepting of the purpose of lending or investment of deposit of money from the public, repayable on demand or otherwise, and withdrawable by checks, demand draft, order or otherwise. See next, Professor Karen Cross. A bank is a financial intermediary, a dealer in loans and debts. So students, we see function of commercial bank. First, acceptance of deposit. Deposit constitute the main source of funds of commercial bank. Saving leads to the creation of deposits. Deposits are categorized as first demand deposit and second time deposit. So we see first what's meant by demand deposit. Deposits that are withdrawable on demand are known as demand deposit. They are in the form of current account and saving account deposits. Current account is usually opened by businessmen, corporations, industrial houses, trusts, etc. They are provided with overdraft facilities. Overdraft means withdrawable in excess of the balance in the account. Saving accounts are opened by a large number of people, particularly the salaried class, small traders, etc., who wish to save a part of their income with the bank. Then time deposit. Time deposit, deposits that are repayable after a certain period of time are known as time deposit. They are in the form of recurring deposits and time deposits. Recurring deposits refer to deposits wherein consumers deposit a fixed amount at regular intervals for a specified period of time. Then fixed deposit refers to a lump sum amount deposited by a consumers for a specialized period of time. Compared to all other deposit, fixed deposit carry high rate of interest. Then second function of commercial bank is providing loans and advances. Commercial bank mobilize saving and lead these funds to institutes and individuals for various purposes. Based on the tenure, loans include call loans, short term, medium term, and long term loans. Longer the duration of the loans, greater will be the rate of interest. Besides this, bank also provide cash credit, overdraft facilities as well as discount bills of exchange. Then we see next function, ancillary function. Commercial bank also provide a range of ancillary services such as transfer of funds, collection of money, making periodical payments on behalf of the consumers, merchant banking, foreign exchange, safe deposit, lockers, demat facilities, internet banking, mobile banking, etc. The next function is credit creation. Credit creation is an important function of commercial bank. Commercial bank are creators of credit. Demand and time deposit constitutes the primary deposits of banks after meeting the reserve requirement out of the net demand and time liabilities. The balance amount is used for giving loans. Thus, secondary deposits or derivative deposits are created out of the loans given by the banks. For instance, or for example, when the bank provides loans to its customer, the loan amount is credited into the bank account of the customer. The bank that received the loan amount as a deposit keep aside a certain portion in the loan in the form of reserve. After meeting the reserve requirement, the bank leads the remaining amount. This procedure is followed by the entire banking system in the country, leading to creation of credit. In short, commercial bank creates deposit out of the loans given, thereby leading to creation. These are function of commercial bank. So next point, cooperative banks. Cooperative banks come into existence with the enactment of the Cooperative Credit Societies Act of 1904. Cooperative bank supplements the efforts of commercial bank by meeting the credit need for the local population, fulfill the banking need of small and medium income group. The cooperative credit sector comprise two cooperative credit institutions such as primary cooperative credit society, district central cooperative banks and state cooperative banks. This is a three-tier cooperative credit structure. Next, development financial institutions, that means DFIS. Development financial institutions are agencies that provides medium and long-term financial assistance. They help in the development of industry, agriculture and other key sectors. Industrial Finance Corporation of India was the first development financial institution to be established in 1948. Development financial institutions have diversified their operations with the advent of liberalization and globalization. They have set up subsidiaries to offer a wide range of new products and services, such as commercial bank, consumer finance, broking, venture capital finance, infrastructural financing, e-commerce, etc. Thus, development financial institutions are in the process of converting themselves into universal bank. RBI has issued guidelines for development financial institutions to become commercial bank. For example, ICICI, that means Industrial Credit and Investment Corporation of India, has become a universal bank by a reserve merge with its subsidiary ICICI Bank. And then Discount and Finance House of India. The Discount and Finance of India, that means DFHI, was set up in 1988 as a money market institution based on the recommendation of the Vagul Committee. It is jointly owned by the RBI, public sector banks and financial institutions to impart liquidity to the money market institution. These are organized sectors. Okay students, thank you.